the New York Stock Exchange, kicking off a new trading week, and we are seeing some gains at the open. Dow up about 1/3%. Let's take a closer look at what to expect for the week. Alan Nuckman is Chief Market Strategist at Agora Financial. He joins me from Chicago. Alan, it's great to see you. I know a lot of the focus as we start this new trading week is on oil. How closely are you watching it down there, and how high do you think it could go?
Well, I view this as a positive. This is a sign of global growth, and you're seeing this spill over into some of these energy stocks that had been kind of left behind. So I could see this as a catalyst for a sector in this market that has been very solemn over the last couple weeks. So this move above 70, target 75. 75 is just a halfway point of the drop from that extreme high at 114 all the way down to those lows. So we've only recovered half of that big overall move.
Yeah, and you know, it's right to point that out. I mean, we worry about the impact on consumers, but that energy sector for a long time was a leader for the stock market. You know, we're coming off of that jobs number on Friday. There was a little bit for everyone in there. The market generally seemed to get the sense that it didn't put a huge amount of pressure on the Federal Reserve. Where are you when you're looking at interest rates and what we should expect when it comes to inflation in the Fed?
Well, I don't think interest rates are much of an issue right now. We still have a long ways to go to get even normalized rates where people have to make a choice between getting yield in either the stock market or treasuries. Right now, even though rates have risen some, there's still not any choice. If you look at the S&P yield plus the appreciation of the stock market. Like what I saw last week, I really liked. We saw a big price pop in stocks once again. Now, that's 3 weeks in a row where we had sharp sell-offs, but the markets have rebounded each and every time. And with all of these issues that we've had in 2018, the S&P is essentially unchanged, but let's put it in perspective. It's up 299% since the March of 2009 lows. So this bull market is not dead.
Everyone likes to say they don't die of old age, but you can see a lot of worry creeping in the market. It seems to be prone to those sell-offs. And even when we're getting really good earnings, Alan, there was concern that peak earnings, you know, are maybe past us and that it's only going to be more difficult moving forward. Is that too pessimistic?
Well, I think that's a good problem to have, that our earnings are so exceptional that we're worried if we can achieve them over and over again. Now, 80% of S&P stocks have reported, 80% have beat on EPS, and 80% have beat on revenue. So there's nothing to complain about there. But what this has done, and this has made stocks actually cheaper. Stocks are now below their 5-year average as far as the PE goes. We're at 16 when the 5-year average is 16.1 because earnings have been so exceptional that has lowered the actual cost of stocks in relative terms. So stocks are cheaper than they've been in a couple of years. We've got oil positive. We've got the VIX down at the 15 level. So you've seen some of that fear, concern come out of the marketplace. So I'm seeing a lot of positives right now. And let's talk about something. And if you want someone that's been pessimistic, people have been pessimistic about Apple for years. Apple is closing in on $1 trillion in market cap. Just made new all-time highs last week. So I see a lot of positives in this marketplace. And I especially like the price action. The ability to bounce back every time we see these sharp sell-offs and reject those lows is very much a positive in my opinion.
All right, good stuff, Alan. Thank you so much for the insight. Appreciate it.